Hello and welcome to The Bottom Line on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. The Czech National Bank announced earlier today that it will keep its interest rates at 3.75%. After a series of consecutive cuts over the last months, we'll explore the significance of this decision. But first, let's go to Jan Kennedy's feature report for the day.
The Czech Central Bank has decided to hold off from loosening its monetary policy in March on the back of last month's rate cut.
At the
meeting today, the bank's board kept interest rates unchanged. Our base rate remains at 3.75%. This decision reflects the updated inflation outlook, its risks, and an assessment of new data.
This restrained approach comes as no surprise to the markets amidst the recent price increases.
There is some growing risk or some fresh inflationary pressure stemming, for example, from wages or from services or from food in the Czech Republic.
While consumer inflation remains within the National Bank's tolerance band at 2.7%, services inflation was 2 percentage points higher, adding to the underlying pressure. Additionally, the prospect of an intensified trade war between the EU and the US further contributed to the central bank's protective stance.
We'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point.
While US tariffs may not have a direct impact on the Czech economy, the country's auto sector, which is closely linked with Germany, could receive a substantial blow.
Germany is our number one trade partner with lots of our suppliers supplying the German OEMs, and Germany with Italy or also Slovakia exports a lot of vehicles to the US. So through Germany, our companies will be impacted.
Last week, the Bundestag approved a revolutionary fiscal package aimed at propping up the country's infrastructure and defense sector.
Stronger German economy and more money and more capital flowing into it will boost also to some degree Czech economy because stronger demand of Germans for even Czech goods and services.
But this isn't expected to provide the Czech economy with an instant boost. Nevertheless, economic growth in 2025 is forecasted to be nearly twice as high compared to last year.
We expect 1.8 because of the impact of trade war, because of still quite weak German economy. And even if there is really the package of German government or new government or new grand coalition in Germany, we do not expect this will have effect this year, maybe next year.
And there's also the question of defense spending. The Czech government aims to raise it by 0.2 percentage points every year until 2030, when the 3% target will be met. This should also give a kick to the economy. However, the Czechs will vote for a new parliament later this year, and current poll leader Andrej Babiš wants to keep the defense spending steady at 2%.
So this year could be a year of positive change for the Czech Republic. Those more skeptical might say it will only be incremental. But there's increased demand for defense production. The GDP forecast is definitely better. And monetary policy will also play a role. To discuss today's decision and what this brings to the Czech economy, I am pleased to welcome two guests today. Dominik Rusinko, Chief Economist at ČSOB Private Banking, and Petr Gapko, Chief Economist for Moneta Money Bank. Hello, gentlemen, and thank you very much for joining us today.
Hello, thank you for having me.
Thank you. Good afternoon.
Hello. So to begin with, I wanted to ask you both, what is the significance of today's decision coming out of the Czech Central Bank, sticking to 3.75%? Dominik, perhaps we can start with you, please.
It was a widely expected decision by the markets, by the analysts, so I think no major surprise. The message is still quite hawkish in terms that there is not much of a guidance for the next moves in Czech monetary policy. Governor Michal said that all options are on the table, including increasing interest rates, which I don't see as a very likely option. But still, the message is that the rates are here to stay higher than was the case before the pandemic, and that the Czech National Bank will be still very conservative and will only move gradually. And then the room for lower interest rates is not very large at this point.
And Petr, perhaps you can tell us, is it possible, though this announcement was widely expected, is there a chance that some might perhaps disagree with this decision, perhaps would have recommended a different announcement today, and if so, why?
Might be the case. However, I completely agree with my colleague Dominik that this was first expected. It was also pronounced before by central bankers. If we look at what drove the decisions, it was definitely inflation, which came out in February slightly higher than the Czech National Bank expected, and also it's in line with the long-term policy of the central bank. So there might be some disagreements, but I'm completely aligned with this decision. Although one thing I would like to add is that the base case scenario for this year is still the interest rates to decrease approximately to 3.25 or 3.0.
Okay, and Dominik, I wanted to ask you, we see the prices of services going up in the Czech Republic. What is the reason behind this? Is it possible that there is labor shortages, which is obviously quite a common problem in Europe?
Certainly, that's a common problem in the Central and Eastern European region for quite some time. We all have quite tight labor markets. And you are right that this is sort of pro-inflationary risk for the Czech National Bank, that the fact that services inflation is still around 5 to 6%. And we see that bringing the services inflation down will take simply longer than it is the case with a goods inflation that is already well below 2%. Specifically in Czech Republic, you see that the wage growth in some services sector is still elevated around 8 to 9% year on year. And of course, the pass-through to inflation in services is quite fast and is quite significant because in services, the wage is quite significant part of the overall cost. So the pass-through is quite significant and fast.
Petr, I wanted to ask about the economic situation in the Czech Republic, because obviously economic growth has been a little bit bumpy for the last few quarters. It's been a bit of a challenge. This year, we're looking at about 2% growth, if not more, and we're only in the first quarter of 2025. Can you tell us what has changed? Because all of this has actually happened despite fiscal tightening by the government. What's the trick? What's the madness in the method, especially from a Western perspective?
Well, first, the bumpy road was here for a couple of years, so I would extend that period. And it's like, I think that the economy still needs to catch up with the shocks it experienced first during COVID and second after the Russian invasion to Ukraine. So these were two very negative shocks. We saw an economic recession, which was caused by the former and then a very mild recession by the latter. And last year was the first year of at least some economic growth. So I would say this is a normal recovery, which is at this time driven by domestic consumption. And the domestic consumption is allowed to grow simply by the fact that the wage growth first in last year, after some period of time, exceeded the growth of prices. That means the inflation.
And now I'd like to move on to the Trump tariffs. And first of all, I'd like to hear both of your opinions as to what the sense in the Czech Republic is. But first, I just wanted to bring up a quote from Thomas Dvorak, a senior economist at Oxford Economics. The Central and Eastern European region is also vulnerable to tariffs. Their direct exports to the US are small, but their exposure through integration in global supply chains and persistent trade surpluses is much greater. Central and Eastern Europe will be the hardest suffering region, hit twice as hard as the Eurozone average. Until recently, when I've spoken to many experts, they've been quite calm about what the future holds in regards to the incoming tariffs. And now this narrative is changing. And obviously, this quote also suggests that what is about to hit us, is going to be quite hard-hitting, to say the least. Petr, perhaps you can give us your opinion on that.
It was completely correct that the exports of Central Eastern Europe to United States, I mean the direct exports are not that significant, and the most significant impact should come probably through a lower European demand for Central European goods and services. In the case of Czech Republic, basically we export 80% of everything we produce on our territory, and a third of that exports goes to Germany. So for us, it's definitely essential what happens in Germany. Should the German economy be affected significantly by the tariffs, then of course the Czech economy would be impacted as well. And I think that the only chance for Europe is to replace, in the case of some extended trade wars between the US and the EU, to replace the, let's say, US market with the higher demand from internal European market.
And Dominik, here we are with the Czech Republic on the cusp of recovery, some incremental economic growth, and now we have this on your doorstep. What is the sense in the Czech Republic?
The sense is that it could actually be an obstacle for the recovery. This year, we assumed that the growth, for the annual growth, could be around 2%. But to be very honest here, we have gradually reduced our outlook for the Czech economy. We started in the mid of last year close to 3%. But now what we are seeing is actually then these downside risks that are still, clouding our outlook has actually started to materialize to some extent. And now we face another risk. The risk is Donald Trump and his chaotic politics and trade tariffs. And I would agree with Petr, I would agree with Tomáš Dvořák that the Czech Republic and Central and Eastern European Union are most exposed, not directly, because in Czech Republic we export only 2% of the overall exports to the US. That's not a high exposure, but trade linkages and our exposure via the supply chains integrated around Europe and specifically with Germany is elevated. So the indirect impact could be quite high. For example, Czech Ministry of Finance actually assumes if we get a 10% increase in US tariffs, that the impact could be as high as 0.5 percentage point down. And that would get us rather close to 1.5% in annual growth.
Well, that's very significant. And perhaps I could ask you, Petr, what you think in terms of numbers, what kind of impact that might have on the Czech economic growth, what you think these tariffs might do in terms of the forecasts, detrimental forecasts on the Czech growth this year.
We were talking about 2% growth projection for the Czech Republic. Over here, I must say that these forecasts, around 2%, are not including the impact of the tariffs. Second, the impact of the tariffs will strongly depend on how the situation evolves in the future. And as Dominik said, let's say the 0.5 percentage points cut from the assumed 2% growth is, I would say, currently widely expected throughout the economic sphere in Czech Republic.
Okay, now I wanted to move on to defense, obviously a hot topic these days in Europe. So a cohesive European defense strategy is a priority for all of us. And obviously that includes increased defense production. And obviously this is an opportunity for the Czech ammunition production to step up and take a lead role. And yesterday we had a guest on our show from CSG who was very, very confident about boosting production in terms of both delivery and broader European contribution. Dominik, what are your thoughts about that in terms of what the Czech Republic can deliver in that sense and what kind of impact that might have on the Czech economy?
Well, in Czech Republic, we have a long, historical tradition of weaponry. So certainly there is an opportunity for Czech companies. At the moment, it's around 1% point of GDP of the overall economy. So it's not a massive share compared, for example, to automotive industry, which with indirect links has some 10% of the overall economy, but I see a room for improvement. But it will take some time. So I don't see a massive boost for Czech economy this year or next year, just from the fact that we will produce and export more weaponry. I think it will be more gradual progress. But at the same time, I am pretty sure that this could be a source of growth for the let's say medium to long term, and this is ultimately a good news because Czech economy is looking for a new impulses to grow, and this could be one.
Definitely. And Petr, we also know that the German spending package has been voted and also a significant development that impacts the Czech Republic. We're looking at approximately 0.4 to 0.6% of the German GDP. And obviously this, in one way or another, sooner or later, will also impact the Czech Republic. What are your comments and thoughts on that?
Definitely, this was perfect news for the Czech economy. As was discussed, the Czech economy is quite crucially dependent on the German one. So everything what happens in Germany sooner or later comes to Czechia as well. Should, let's say, the German package boost the German economy, we can expect that positive impact will be seen also in Czechia. However, that will probably not come this year. It's rather a good news for the coming years.
And what do you think will actually impact the Czech economy more? Do you think it will be this German fiscal package, or will that impact the Czech economy more? Or do you think that it's this increased demand for defense spending? Dominik, perhaps you could give us your thoughts on that as we slowly wrap up.
Well, there is a timing mismatch. While we will probably get hit from US tariffs as soon as in the second quarter of this year and probably for the longer, the positive impact of Germany fiscal bazooka, if I can call it this way, will come later, because also the investment into infrastructure will take some time in Germany. So we count on significantly better growth prospects for Germany in 2026 and 2027. So the positive spillovers to Czech economy will come only later. So next year and then after. So in terms of mismatch, we'll probably get first hit from the tariffs, negative shock, and then a positive shock, but not earlier than next year.
And Petr, what about your thoughts on that?
I completely agree with Dominik. There is a timing mismatch. However, probably one thing to add is that we see that the domestic industrial production is kind of improving, at least in its economic mood. This is good news. The Czech consumer is still quite well off. So these are positive effects which are currently, let's say, pulling the economy from the mood from last years. Going forward, we will probably see a negative impact, which will come first from the tariffs, which might be then more than offset by positive spillover effect from the German economy.
Okay, thank you very much, both of you. Dominik Rusinko, Chief Economist at ČSOB Private Banking, and Petr Gapko, Chief Economist for Moneta Money Bank. It was great to have you on the show today.
Thank you very much. Have a good day.
You too. And that concludes The Bottom Line today. I was your host, Marie Cato. Join us every weekday afternoon at 5:10 CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.